Hello and welcome to today's episode on the Craving Crypto podcast. Today we're going to be going over the Syscoin pump and talking a little bit about how volatility won't stop cryptocurrency. So let's get right into this. Alright, so I'm at my document. As always, you can find this in the description of each Craving Crypto podcast, which just has a basic outline of what we're talking about each week and some details on the market cap and some sign-up links. So go ahead and check this out if you haven't yet, again, in the description so you can get your hands on that. Starting with Bitcoin, we have $111 billion in market cap. Current price is at $6,513. 24-hour volume is at 4.6 billion. And our 24-hour change is down about 1.4%. Ethereum is $46 billion in market cap. Price is $463. 24-hour volume is 1.6 billion. Circulating supply is 100 million Ethereum. And we are down 2.4%. XRP is 19 billion in market cap. Price is 48 cents. 24-hour volume is 400 million. 24-hour change is down 0.43%. Bitcoin Cash at 13 billion. Price is at $756. 24-hour volume is 476 million, and the 24-hour change is down 2.35%. Last but not least, EOS is at $7.8 billion in market capitalization. Price is at $8.81. 24-hour volume is $1 billion, and the price is down 0.69%. So, as far as the market capitalization goes, we're at 265 billion in total. We did make a new low in market cap, but quickly bounced out from making that new low. So it's just whether this sticks or not. Because we did make a new low, it's possible that we go in again for a little bit deeper to around 200 billion or so in market capitalization. But currently I'm going to lean to the bullish side unless we have a nice support failure. Then I will say we need to see some more downside. And the reason for this is just because Bitcoin has broken out of some falling wedge patterns, which is showing some upward momentum. So we're just waiting to see if that upward momentum is going to stick or whether we still need to go in for a little bit more panic. But I will say it looks pretty good overall right now, and this breakout is nice and strong. As far as the change right as of today, earlier today we were a little bit more green in the market cap, and yesterday we were really green in all of the coins. So we're just selling off a little bit today, taking some profits on some stuff. Now, Syscoin, literally just a few hours ago today, let me find it on CoinMarketCap here. Just a few hours today, pumped. A few hours ago. As you can see, it's up 89% on CoinMarketCap in 24 hours. The US dollar chart on here looks pretty incredible, honestly. You saw the price rally from about 0.15 or 15 cents all the way up to 44 cents really quickly here. The volume is about 254 million. And basically what happened was Syscoin was hacked and Binance was hacked, which created some type of pumping action. And I don't know about all of the details behind this hack. There isn't a lot of information out as of yet, but if you check out the Syscoin Twitter, you can get some information. But they basically just say, we are investigating a possible issue on the Syscoin blockchain. Nothing is confirmed, but we have asked for exchanges to halt trading while we investigate. So they think that there may have been a problem on the Syscoin network, or it was hacked, which affected Binance's Bitcoin to Syscoin price. So let's just go ahead and look at that, because it was pretty crazy what happened here. Let me just zoom out here onto the 30-minute. And then if we pull down and we double click, as you can see, there's this huge wick where the price went from its current Bitcoin price at about 0.00053 all the way up to 95 Bitcoin, or actually the exact top was 96, I believe, which is pretty insane. That's a really, really big flash pump to happen, and the majority of it happened like literally in 1 minute. So we're gonna watch a video that I found earlier today on Twitter that shows you what exactly happened. So shout out to @CryptoTutor on Twitter for making this nice little video for everybody. You did a great job, by the way. So if we just click play here and then go full screen so you can really see what's happening. This is a 1-minute candlestick playthrough of the Syscoin Bitcoin price. And as you can see, it rallied from these really, really low Satoshi levels. And then all of a sudden it starts pumping and boom, just like that. Tops out at 96 Bitcoin and flash crashes all the way back down to the 0.00008 Bitcoin levels, which is really quite incredible, but also insane. A lot of people got stuck up in this. I'm sure some people made a lot of money. I know other people lost a lot of money. So it's kind of one of those things where it's just like craziness in the market. I mean, this has actually happened to Ethereum before. If you type in ETH/USD. So here's the Ethereum USD Coinbase chart on the daily candlesticks. And this was back in 2017 between March and August, where we saw Ethereum really rally from $100 all the way up to just over 400. And when we got to the $400 levels, I posted on TradingView and said that Ethereum looked like a pretty good short, but I never expected this to happen. Basically what happened after that was we saw Ethereum drop down to about $260, bounce up to about $360. And then on GDAX, there was a flash crash and the price of Ethereum dropped all the way down to the $7 levels in a wick. And this was just a classic example of a huge panic shakeout from an exchange glitch that screwed a lot of people over. So these types of things happen, flash crashes and flash pumps, especially in highly volatile markets such as cryptocurrencies. So this is really why you have to have risk management installed in place, meaning you want to have a lot of your coins off of public exchanges stored on hardware wallets. And then you also don't want to be putting too much into any single trade or coin, because can you imagine if you had your entire portfolio in Ethereum on Coinbase that day and then you watch the price drop all the way to $7? The psychological toll it would have on you, you might be enticed to panic sell. So having so much money in one coin plus all of the crazy things that can happen sometimes in crypto is just asking for trouble. And you know, after this, Ethereum accumulated very nicely and went on for a huge bull run. So it's not like it was the end of the life for Ethereum. It was just one bump along the road. But anybody that had bad risk management in place or got screwed over in margin or anything like that would have taken a pretty big loss off that. So overall, the thing that happened with Syscoin is normal. It's part of markets, but it is pretty crazy. And I'd love to get more details and information on it down the road, especially if we can get some more actual press released or some type of confirmation as to what happened and details, because everything right now is just like Twitter, that you can kind of go get some stuff on Twitter, but it's all pretty hearsay or just like screenshots of things, so you just don't get really as much as you'd like to see on something like this. But I'm sure, I'm sure it'll come around, so we'll just have to watch out for that. And as you can see, the Syscoin Bitcoin Binance chart, this is on 1-minute candlesticks, and this is just ignoring the huge flash pump because this happened in the middle of the pump. So we're just kind of looking at the cycle itself, kind of what happened, and looking at it in comparison to the Syscoin chart, because what's interesting is it's kind of doing the same thing Syscoin already did. So looking at Syscoin, you can get a pretty clear read on a nice wave count. If you know much about Elliott wave theory, you can apply this pretty easily here, A, B, C. And comparing this to what's actually happened in Syscoin today, in the bigger time frame, the daily candlesticks as opposed to the 1-minute candlesticks, then you can get a similar kind of count going on here of a 1, 2, 3, 4, 5 up, and an A, B, C correction. they're not exactly the same, but they're pretty similar in pattern. And that just goes to show how humans think the same in every single time frame. Whether you're in 1-minute candlesticks or whether you're in daily candlesticks, you always get the same patterns that arrive. And it's really neat and interesting to find these patterns and compare them to each other like that. Because although it's not a perfect comparison, you don't have to have a perfect comparison to make money on it, right? You just have to have one that's close enough that when you put your money into it, you have really good odds on it turning out in your favor. And as long as you have low risk and you're not putting too much in any single trade, you can allow these patterns and these fractals to work in your favor to make some pretty nice profits off of all of these swings. So the Syscoin thing is pretty cool, pretty interesting, something that I was excited to see going on. I mean, yeah, people lost money, and I feel for those people specifically because I understand what it's like to take losses. But overall, it was just another day in a crazy, volatile market with always exciting things going on and something to be looking at. So Syscoin pump was pretty cool overall, and hopefully I can talk a little bit more about it on one of the other ones if more info or information comes out. On the one of the other ones if more information comes out. All right, so let's talk about a crypto flaw debunked. This one is volatility. And this is something that I've heard a lot of people say because they're like, Bitcoin, the problem with Bitcoin is the price goes up too high and drops too hard, right? They don't want to touch it because it has a lot of volatility because the market capitalization is really pretty small still, honestly, in comparison to what it could be down the road. And so people always point this out as a reason that Bitcoin wouldn't succeed or that cryptos won't succeed because people don't want to live through these huge drops, these huge falls and crashes in the price. They think that it'll shake everybody out and that people won't use crypto anymore and that volatility will stop it from growing. And honestly, I've heard this argument plenty of times from lots of different people, and I completely disagree for a few different reasons. First of all, high volatility provides high profit margins, which increases volume, which increases amount of attention and focus on something. So saying that something's highly volatile is a bad thing is not necessarily always true, because often high volatility in a really liquid market allows for a lot of interest and growth because people keep coming into that volatility for profitable purposes. And that's kind of like I referred to in last video, that you would pour gasoline on a fire. So with volatility specifically, first of all, it decreases over time. So this is true in the stock market today, because if you have $500 billion in market capitalization, can you imagine how much money it takes for that coin or stock to grow? It takes a lot more money to move that market. If you have 100 or 200 or 300 billion dollars in market capitalization, it doesn't take that much to move that, right? Like crypto is so much smaller than, crypto as a whole is so much smaller even than one or two stocks in the stock market. So if you kind of put that into perspective for yourself and realize that it's got a lot of room to grow, right? It's not worth that much right now. And then the high volatility at these really, really low market capitalization levels is part of the growth curve and actually increases the amount of interest in it and brings more attention towards it. Then you start to put the pieces together and you realize that volatility on the short term does affect some people. But if you are investing in this and you're interested in cryptocurrency in general, I'm just going to be blunt with you. You should be able to stomach volatility. You should be able to handle it because you're handling a highly volatile investment. So if you're going to do this, you have to be aware that that's the way it is. And so people are cool with that. I mean, yeah, some people have problems and it's hard to learn how to manage it. But overall, the majority of people in the cryptocurrency space are learning how to deal with volatility, whether that means holding, whether that means trading, whether that means maybe they aren't in this for investing and they decide not to because it's not something that they want to even learn how to do. But overall, the high volatility affects it in a good way. Although it has some negative effects short term, overall, in my opinion, especially as a trader and somebody that understands investing, high volatility can be an extremely good thing and a great opportunity if used in the right way. You know, again, just don't be dumb. Don't use bad risk management. Don't put 100% in one coin that might go down 80% in a few weeks, because that's the way this works. So be smart about what you're doing and plan yourself out. Understand that it's highly volatile. And with that, the volatility will continue to decrease as the market capitalization increases, because then as bigger market cap there is, you have more money to move that market. So right now it's a great opportunity to be investing and interested in cryptocurrencies because of the the high volatility. And as we move into a low volatility in the next few years or so, it will really be a more mature market with less crazy swings like this, which also has its pros and its cons. So that's kind of my idea on why volatility is, yes, has some short-term effects that some people might not be interested in, like the price dropping quickly and hard. That's going to affect some people negatively, and that might scare a few people out. But overall, the high volatility actually is like pouring gasoline on a fire. It just increases all of the hype around what's going on and really makes for a more profitable market, which increases the amount of investors interested in it and increases the price long term. All right, so this comment was made by Ali Zamani, and he says, if we are in the depression phase, why is everybody so full of hope that is in the bottom and we are at the beginning of the bull trend? If you look around on YouTube, Twitter, and so on, you will see that everybody thinks we are in the bottom. Also, the number of long positions is growing while the number of short positions is dropping. Is where the price goes down. If I remember correctly, almost 90% of traders lose money and only 9% gain in the market based on the number of traders, not volume like the number of shorts and longs. So I think 9% have to bet on the crash of BTC, and they are right. So I personally think that this is a great comment and a great perspective to be dropping here. And I'm just going to go over why I personally don't think that it really is applied quite that easily. You can't just use the percentages exactly like that and say that if 9% only win in the market and you're seeing that everybody's bullish right now, then it has to crash. I understand your perspective on that, but percentages don't go one for one like that. Basically, what you're looking at is a lot of fog in the market. There's a lot of people that are bearish, and there's a lot of people that are bullish. And if you look around, it's really hard to determine the exact percentage in which people are saying. So generally what happens, instead of the market looking like 91% to 9%, you're looking at, in a time of high uncertainty, you might have a 50% or 60% diversity in the market. This is because it's really hard to sway the majority of everybody in one direction. So you can't just all of a sudden have 80% of people bullish and then 20% of people bearish at the flick of a switch. It takes a lot of persuasion and trends and psychology to go through to really get people to decide whether they're bullish or bearish or not. Saying 91% to 9% is a little bit of a flawed argument, just because I don't know where you're getting the indicator of looking where people are bullish and bearish. Like, how are you proving that 90% of the market is bullish right now? And then second to that, when I've done analytics on my Twitter, because I've posted and done polls and asked how many people are bullish or bearish, generally I find a lot more accuracy in looking at the overall 50 to 60% differences. So if I ask if the bottom is in or something like that, and 60% of people say yes, the bottom is in, then I honestly believe that the bottom isn't in, because the majority is leaning towards the bottom being in. So although the percentages aren't 91 to 9, they're actually a lot more like 50 to 60. And when you do these polls, you need to be aware that they aren't always perfect, and your test subject, meaning that the people that you're asking, is going to be a very small crowd, so you don't really have a full amount of data to really prove the argument. Unless you have access to, like, 100,000 people, then you might get a little bit more of an accurate kind of argument with that. So that's kind of my opinion on that. I see these as fractals and market cycles, and according to the fractal and the market cycle, I see depression, and I see a lot of people bearish right now and leaving the crypto space or just not touching their wallets and being kind of down on the whole situation. So in my opinion, that is a better indicator than just some people on YouTube that have a lot of subscribers that are still bullish because they understand the bigger trend. Because I know a lot of people on YouTube are bullish, but that's honestly just because they understand long-term this is going up and this is an accumulation zone. And so it's not necessarily to say that everybody's bullish. It's more just that the bigger people and a lot of the influencers are still bullish because they really do understand the technology. So that's my opinion on your argument. I appreciate the comment and for bringing up that point, but I personally think that it doesn't exactly format and just convert directly like that, although it is a good point and something interesting for me to think about. Yeah, so that's pretty much everything that I wanted to go over today. Again, shout out to Crypto Tutor for that awesome little video that he posted on Twitter. Check out Coinigy if you want to do charting, BitMEX if you're interested in leverage trading, but I don't recommend doing this if you're a beginner for sure. And then here's a donation address if you like what I'm doing here. Thank you so much for tuning in today's video. I hope that you learned something. If you have any questions or comments, go ahead and drop them in the box below. Hit that like button, hit that subscribe button, and I will see you guys in the next one. As always, stay profitable out there.